Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today, we are diving into the world of 10 Holdings Inc. and their recent Form 8K filing. You know, sometimes these filings can be about as exciting as watching paint dry, but trust me, this one has a few interesting twists and turns we need to unpack. It's like finding out your neighbor, who you thought was just a quiet accountant, is secretly a competitive salsa dancer. Let's get started and see what 10 Holdings has been up to. We'll be focusing on their initial public offering, a fancy term for when a company starts selling shares to the public, and a few other key details that could impact the company's future. First up, let's talk about the underwriting agreement, which is really the main event here. In simpler terms, this is the deal 10 Holdings made with a group of banks led by Bancroft Capital to help them sell shares of their stock to the public. Think of it like hiring a real estate agent to sell your house. The house, in this case, is shares of the company's stock. The agreement was signed in February of 2025. 10 Holdings wanted to offer shares to the public, and the banks agreed to help find buyers. The company successfully completed its IPO in February. It offered 1,667,000 shares of its common stock at a price of $6 per share. The underwriters get a cut of that money as a discount. The company had been working on this for a while. They initially filed paperwork with the Securities and Exchange Commission, or SEC, in October of the previous year. The SEC basically checked everything to make sure it was legal and above board. The SEC gave the green light to 10 Holdings in February. The shares of 10 Holdings started trading on the Nasdaq stock market under the ticker symbol XHLD. This is a big step for a company because it opens them up to a lot more investors. It is like a small local restaurant suddenly becoming a national franchise. As part of the deal, 10 Holdings also gave the banks something called warrants. Warrants let the banks buy more shares of 10 Holdings stock in the future at a set price. It's like giving the real estate agent the option to buy your house later at the price you agreed on initially, even if the market price goes up. The warrants allow the banks to buy 83,350 shares at $7.20 per share. They can use these warrants for 5 years. If you're curious to read the full agreement and all the fine print, you can find copies of the underwriting agreement and the warrants as exhibits attached to this filing. You can dive into these exhibits if you like reading legal documents, but just be warned, they're not exactly page-turners. Just a quick note, this filing isn't an offer to sell or solicit buying these securities in any state or area where that would be illegal. Basically, the company is making sure they are following all the rules and regulations. Next, we have something called Regulation FD disclosure. Regulation FD is a rule that says companies have to share important information with everyone at the same time. They can't give it to some people and not others. To comply with this rule, 10 Holdings issued press releases. The first press release was about the pricing of the IPO, meaning how much the shares would cost. The second press release was about the closing of the IPO, meaning the deal was officially done. You can find these press releases as exhibits to this filing. This section clarifies that the information in these press releases is just being furnished and isn't officially filed for certain legal purposes. It's a technicality, but it basically means the company is being careful about how this information is used in future filings. Finally, we have a list of the exhibits, which are the documents attached to the filing. These include the underwriting agreement, the warrants, and the press releases we just talked about. And that's it for the main parts of this Form 8K. The filing concludes with a signature from Randolph Wilson Jones, III, the Chief Executive Officer and Director of 10 Holdings, Inc. Now, let's step back and take a broader look at what all of this means for 10 Holdings and its future. Launching an IPO and starting to sell shares publicly is a big step, and it usually means that a company thinks that it can use the money raised to fund plans for expansion and growth. But it also means that the company now has to answer to shareholders. The company will face more pressure to perform well. 10 Holdings also granted warrants to the underwriters. While these are pretty standard in IPO deals, they do represent a potential dilution of existing shareholders' value if those warrants are exercised in the future. Dilution means that each share represents a smaller portion of the company. This can make investors see the company as less valuable. One thing I would pay attention to moving forward is how 10 Holdings uses the money they raised from the IPO. Are they investing in new products or services? Are they expanding into new markets? Or are they just sitting on the cash? The answers to these questions will tell you a lot about the company's long-term prospects. It is very important to monitor where their money goes. Also, the market conditions will greatly affect the business. How well they adapt to those conditions will say much more about how well the company is run. Ultimately, whether 10 Holdings will be a success remains to be seen. Thanks for watching. If you found this corporate decoder breakdown helpful, please subscribe to our channel for more easy-to-understand explainers. Don't forget to like this video and leave a comment with any questions or suggestions for future filings you'd like us to decode. See you next time.